to the Smart Property Investment Show with your host, Phil Tarrant.
Hello everyone, welcome to the show. Phil Tarrant here. I am a property investor. I'm also the editor of Smart Property Investment. Thanks for joining us. Today, two guests, and I've been looking forward to these guys coming in for quite some time. I have Lauren Kern and Lean Lindley have come in, and they're going to talk to me about investing in property and how they've been doing it together for 7 years now. Guys, thanks for coming along.
You're welcome. Good to be here.
Now, I've known you for...
many years.
It's got to be 20 years, right?
It's got to be about there,
20
yeah.
years. So Lauren's a friend of the family. She's actually a friend of my cousin, and I've known her since she was at high school. So it's been interesting watching you sort of do what you do over the number of years that we've known each other. And it's really quite satisfying and gratifying for me that I'm able to bring you onto the show and actually have a chat to you about property.
Thanks, mate. It's actually a real honour to come in. Going to enjoy it also.
Yeah, it's good. And your partner, Lena, you guys have been together for...
No, just 7.5 years now, yeah.
And it's official, I just heard today. Engaged?
We are
engaged last year, yes.
I'm really excited for you guys. It's great.
Thank
Make
you.
sure I get a wedding invite.
I will, you will.
So we could sit about and talk about a whole bunch of different things here, but what our listeners really want to hear and the stuff that's really popular is just real life investment stories.
Absolutely, yeah.
You guys have done it well. You know, we've had chats over the years about what you've been doing. I'm sort of quite familiar with some of the stuff that you've been running through. But just for our listeners, let's have a quick chat about your portfolio right now. So just off air, you told me you just settled on a new property 2 days ago, Lena, is that right?
Yes.
Can you tell me a little bit about that?
Our last two properties in our portfolio are from Queensland properties. We decided to go with a buyer's agent to secure those properties because we wanted to start looking at positively geared properties. So I was looking in areas in Queensland and stuff like that. I was really cautious about buying out of state, away from Sydney, where we've known, where we've bought.
It could be
sold.
overwhelming somewhere that you're not too familiar with. So, you know, looking at a buyer's agent and somebody that could facilitate that sort of knowledge was really where we needed to head. So
you've got two up in Queensland. Whereabouts are they?
Yeah, so we've got, they're sort of on the commuter belt of Brisbane, so Ipswich. So one's in Bellbird Park and the other one's in that's Bob.
Is this the one that you just settled on?
Yeah,
I'm so
Can you tell?
Oh, look, it's all about,
Dinmore. So they're literally on the commuter belt. They're good, positively geared properties. They'll move forward. Just really happy to sort of we have our Sydney properties, and they were just starting to cost us too much money, and we would just try to look at ways that we could offset.
So the cash flow stuff. You've got 4 properties.
Yes.
Two up in Queensland, one down in New South Wales, and the one that you live in.
Yes, correct.
Which is also New South Wales.
Yes.
So is the property that you live in right now, was that your first property that you purchased, or is that...
No.
Can you tell me a little bit about the story to how you've come to 4 properties? Has there been anything else within there?
Yeah, so at the beginning, we started our first 2 properties we flipped. They were city apartments, Darlinghurst and Potts Point. Bought, renovated, sold.
And you made a bit of money out of it?
Made a bit of money out of it.
Yep.
So, we started with, not much, and we built a bit of money up over those 2 properties. Then we bought our Cronulla unit that we renovated and we live in now. And then a year later we bought a Marrickville unit that's got tenants, and then the year after that we bought the Queensland unit, and now we've just bought the house. So in Queensland,
So in between the first Queensland unit that you bought and the house that you just bought, like how much time sort of is between the two?
Probably about 8 or 9 months.
Okay.
Yeah, we sort of we bought in. Obviously, we made this cash. We made all this cash from the couple of renovations that we done, and we wanted to spread it out. So we bought our Cronulla unit. We renovated it. We bought Marrickville, and then it was sort of like the bank was saying no more. You can't. Your affordability is because at that stage we're making less than about 120 grand a year at household income, and the bank was saying no more. So I spent about 6 months sort of reading everything that I could, getting myself into stitches about like what we were going to do next, how we were going to move forward. And that's when I just decided that we were going to start paying people to find us positively geared properties, because I just couldn't there was just so much information out there, and you don't know how to filter it, or you don't know who to listen to, you know. So we decided on a buyer's agent, pure property investment, and we moved forward. And that's been in the last 18 months. Last year we bought the last 2 properties. So, and
it's been good, I guess, from the perspective that we were at. We flipped houses to sort of get the money together to look at buying, to then invest. And with where we are at the moment, we're looking to do it more aggressively. And we've been able to do that. I think one of our goals personally was to upgrade from apartments to a house. We've been able to do that in 8 months of buying an apartment. So that was really positive.
Let's talk about why you guys are doing this. Why are you investing in property? What do you intend to, what do you hope to achieve out of it?
I like...
Is it just because everyone's doing it?
No, not at all. I think, I'm constantly evolving on our strategy, and we're constantly talking about what we want, right? So, basically what I want for us, and what we've talked about before, is I don't want us retired, paid off one place, living in that, living on a pension, and not being able to travel after we retire. I want us in a position where we can still live the same lifestyle that we are living now, that is 5 weeks holiday a year, that is living where we want to live, and getting a good income. So that's basically what drives us.
The end goal is to have a waterfront property that we own outright.
Yeah. And
we can still travel, obviously, throughout the year when we want to, and also to have some income coming in. That's going to take time.
Have you worked out what you need to do in order to achieve that? Like, are you still going to continue buying properties like you're buying right now? And, obviously you're getting tenants in there to cover the rent. These things are going up in value. At some point in time, you're going to sell off some, and then whatever's left, you're going to use as a income to finance a reasonably, it's not like an extravagant retirement, but a nice, comfortable, realistic retirement.
And that's it. That's definitely what drives us. We just want to be comfortable, right? So we have 2 strategies where, one, we're renovating to sell our primary residence, and we probably will keep on doing that until we have no mortgage or a very small mortgage, or we live on the water, whatever comes first. Mm-hmm. And then also we'd like to, it'd be nice to have a good income from. But at the moment, the positively geared properties are offsetting, our city apartment, our Cronulla apartment is, we look after that. Our positively geared properties are offsetting our Marrickville apartment. So
when you guys sit there and work out this is what we're going to do, how do you find the time to talk about wealth creation and property? I know a lot of people just go, have a conversation, forget about it. Do you do it in a structured way, or is it just that you get onto a property conversation and you talk about it, and obviously it's all framed within this great big dream that you want to achieve, which is really good, and this goal that you've got. But does it change all the time? Like, do you start getting frustrated and get pissed off about it?
It does, and credit where credit's due. Lena is probably the driving force behind a lot of it. She asks me what I want, and I kind of say, look, in the grand scheme of things, this is where I'd like to be in X amount of years. And she's brilliant at making that happen. We do have a lot of conversations about how that's going to happen and where that's going to go. But, I guess for myself, I'm probably not as educated in property as she is. So there's a lot of trust that goes into that, and a lot of, I guess for her, really layman conversations that she has to have with me. So credit to her where she takes her time to do so. But, it is about structuring that time together and being transparent at all times, and also talking to people that we've got other friends that are in property investment, and we do talk to them about what their strategies are and where they're going with it. And it has been interesting, because when we did start our journey, we were so focused on flipping houses and thinking, it's a quick result, there's some cash there, we can move forward. On further inspection, as we've gotten older, and obviously as we're looking at what we're going to do in our lives, we do need to look long term and what that looks like. And so, with the property market the way that it is, and again, layman speak here from my perspective, but, it does continue to grow. There is solid growth in areas if you're getting in at the right time, and that's really what we've looked at and where we've gone with it. We've had some great conversations with a lot of friends. We've been put onto, as I said, Pure Property, I think Lena mentioned, and that he's a buyer's agent. They're a great asset for us, because it's a holistic approach. They go from A to B with it. Lena probably doesn't see as much of the benefits as I do, as somebody coming from a perspective that doesn't know a lot, but I find that it really does help. So, It's been interesting for me on the back end or the back burner sort of thing to have those conversations, and as we have them more regularly, I am learning more and more. So in terms of finding the time, it's necessary. You need to have those conversations.
The relationship you have in terms of talking about properties, it's very normal. You know, it's normally someone's driving it, and and obviously two people, if they're investing together, they're participants together, but there's generally one person who's driving it and someone who likes to take a bit of a back seat. But, you know, it's about the sort of constant information and transparency around how it works. And
like myself as well, sometimes I'm in this, you know, we're on the tunnel vision. Like I have this strategy or this thought in my head, and we talk it out, and Lauren comes to the table with things that I would have never thought of, because I'm in a tunnel vision, you know, aggressive, trying to make things happen so quickly, like a bull, you know. So I think, you know, it's so great, you know, to have a soundboard as well, and also you just check yourself. Like we're talking about, I'm talking about her financial future, she's talking about my financial future, and like I do drive the properties, and like
I like to be the brakes every now and then.
And you know, it weighs very heavily on me that it is both of our lives and both of our financial futures, you know. So I think you have to be having the conversation.
To be honest, it's a really healthy partnership that you guys have. I know I talk to a lot of people. Obviously, my job is to talk to property investors, and you hear a lot of people who have really toxic sort of relationships with someone so driven to achieve something, and they don't have you know, a really good partner to sort of go on that journey. Everyone's got different skills and stuff,
of course,
you know, and different reservations and different sort of visions and stuff. But the fact that it sounds really healthy the way you guys are rolling it, so that's, you know, it's going to get you a long way there.
That's the hope.
Yeah. So your portfolio now is it's about 1.7 million.
Yeah, just under 1.7. Yeah.
So how much debt do you have within that? So what's the sort of total equity you have in there?
It's over 1.3. So
Okay.
we fixed in the 3 properties last year when just before they put up the interest rate hike for investors. We haven't got everything valued for the last year.
Okay.
So nothing's been valued for a year. So that's what. You know, that's what it's...
Where you think it is.
Yeah, that's
and, you know, where you've been buying has been valued quite a lot. Yeah. So it'd be interesting to see how that goes. But I want to get you guys back at the show at a point in the future to talk a little bit about mortgages and stuff. That'd be really, really good. But, you know, we're already running out of time with these things. It doesn't take very long at all. But I'm really intrigued about the way that you guys have worked together as a team to realise these dreams. You know, it's great, those little things that, you know, sometimes I imagine it rubs a bit, sometimes it's absolutely rosy, but you get into like towards the end, and, you know, what I'm really interested in, was it a light bulb moment for you guys to go, why are we buying and renovating and then selling when we should just be keeping these things? What was the sort of transition? What happened there?
There was there was a conversation about a certain property that we had.
We had this great apartment in Darlinghurst, right down from Hyde Park. It was beautiful in this old 1920s building that used to be a hotel. It was stunning.
And we did renovate it.
Yeah.
And I wanted to keep it.
Yeah.
I thought that there was a lot of potential in this. And Lena, of course, wanted to sell it. So, I mean, look, that's probably been the first and one of the very few times where there's been quite a big difference of opinion there. And look, at the end of the day, we did end up selling it. Yeah. I still believe we should have kept it.
What's it worth now? Have you looked at it? Yeah.
And I'm there with her on that. Like, we should have kept it.
Yeah.
And
but at the time, look,
you didn't know what you didn't know.
You do,
exactly right.
And exactly right. And, you know, like, you get advice from people, and some people say one thing, some people say another. And until you surround yourself with the right people saying, you know, with the right information or the right knowledge, you just don't know.
And also a bit of experience. And I mean, you know, for us, that was that light bulb, as you said. What was that light bulb moment? That's kind of my going back to, or that go-to point where when we're having those conversations about where we're going next, we sit down and we go, you know what, look, we learnt a lesson here. Where can we go from that?
Definitely. You know, like, a payday is really nice. You know, when that settles and that money goes into the account, and you're like, oh, gee, that's a nice day. And
we're not drinking passion pop tonight.
Don't you not passion pop, okay?
And so, you know, I think, like, as soon as you get past that initial thought of the cash in the bank as opposed to the equity that you see in the property, once you can get past that, you know, flipping is just not a good plan, like, for a long-term strategy. And it was good at the beginning because it generated quick cash for us to be able to spread out.
To be honest with you, it's not like a fundamental, I've heard so many people get so many worse things wrong than, you know, it's nice retrospectively to say we should have kept it because of whatever.
Yeah.
But you haven't gone and spent all the money on something. You've actually put it back in property and property which is performing for you.
Yeah, of course. Yeah, of course.
Which is good. So, what do you reckon is the worst bit of advice that you've ever got in terms of? And like around the barbecue type advice or professional advice, is there anything you've done where you've just gone, why did we do that?
Yeah, Stanley Street again. It would be the title that it was under.
Oh, yeah. Oh,
gosh.
Our second apartment we bought, so some of the city apartments are company title as opposed to strata.
Okay.
So company, I'll explain what company is.
That's okay. Yeah, go to the website. We've got story articles on it. It's
company. It was a company title. So
there were a lot of hurdles. There were a lot of hurdles in terms of having to.
Yeah. So we had to get approval for renovations, and renovations could only be done between 8 and 5 Monday through Friday, and it was just an endless. Like putting in applications for doing renovations and them taking weeks or a month to come back, and it was just never again will I buy company title. And I had spoken to a lawyer about like the difference between company title and strata title, and they really didn't explain all that went into it. And I think that probably cost us a lot of time.
Cost us a lot of time. It just drew the process out, really.
And just a lot of stress, So yeah, I think like you need a good lawyer who's really transparent and someone who's explaining things to you, especially when you come to things that you don't know about,
So what do you guys think you've done really well in terms of your property investment? And you've only just really started in this process. So is there anything that you go, yeah, that was cool, that was good, geez, we made a good decision there?
What do you think?
To be honest, I'm, it might sound a little pig-headed, but I'm quite proud of us, really.
You should be proud.
Yeah. I think that we've come a long way, and I think one of the things for myself personally was to just let go and be aware of the people around me that do have that knowledge. Lena obviously is the driving force behind it, and just being able to go, you know what, this is scary at times, and this is, this is a risk, but it's a calculated risk, and where can we go from there?
Yeah,
I think the purchase 2 days ago was a big tick for us.
How did you celebrate that? Did you celebrate it?
We usually celebrate.
You don't even know what you bought. You had to check on your phone.
we always. I mean, yeah.
We'll go out to dinner and have a bottle of wine.
When it settles, we'll crack open one of the really good bottles of wine.
Yeah, and we'll sit back and say, well done.
Yeah.
You got to champion.
You've got to celebrate your milestones.
You do.
That's a lot of people forget to do it.
Yeah.
And you need to sit back and reflect sometimes of because say, am I on the right path? Here I am.
Yeah, that's right.
And I think we have our goals board for the year that we write before the beginning of.
You actually write up.
We do.
Yeah, where do you write it?
It's whatever piece of paper we find at so usually at these dinners.
Could
be. One of them's on the back of a receipt that we've got. But we'll go out to dinner. We'll have those conversations, and we'll just jot down a few things. And there's a corkboard at home, and we literally stick it on. And
it's got 6 years worth of
6
the
years
goals.
of stuff.
Do you sort of ever go back and reflect? Do you ever do a stock take and go?
At the
beginning of the year, at the end of the year, we cross off what we've done.
Okay.
And most of the time, most of it's done.
Yeah.
Some of it isn't. But I think that is so rewarding. That's probably one of my biggest. I feel really rewarded when I'm doing that.
You're doing this thing innately and just because it's instinctively, but you speak to any sort of motivational person and stuff, they'll be telling you to be doing that stuff, and most people don't do it. So the fact that you're creating goals, that's one thing, but keeping yourself accountable to those goals is where most people fall down.
Yeah.
I
think that's what works as a partnership, though. You need to say, hey, what are you up to today? Kick each other's butts and get the fire started.
There you go. Well, it's some really, really good food for thought for our readers, and if I was listening to this, I'd be going, I should be doing that myself. So that's really
Try it.
Yeah. Give it a go. We're going to get you guys back, though. I want to talk about money and stuff.
Okay,
we'll get you in sort of a month or so's time when your property's probably a little bit further down the path, and you can talk a bit about that. But thanks for coming in.
Thank you. Thanks for having us.
Really good. Really enjoyed this. It's good. To everyone, thank you for tuning in. Remember to check out smartpropertyinvestment.com.au. You can also follow us on all the Twitter and Facebook and all those things. You can follow me personally if you'd like to, at Philip Tarrant on Twitter. And also, guys, remember to keep rating us on iTunes. We're tracking extremely well. I'm getting a big nod from Adam, the producer here, who's smiling because of the success of the podcast. All due, of course, to me and not you. But no, thank you so much, Adam. You do a great job. Tune in. We'll see you guys again next week. Bye.